Alright, traders. Well, I mean, it was minor volatility with FOMC minutes. You got fresh highs here in the euro. It has since been some profit taking during the Asia session. We got out of our long euro that we were in for around about 108.40. That we were in for a fair bit of time. So we got around, actually we got out 118.10. So it's a bit early in the game. On Tuesday it must have been. No, Wednesday. It was Wednesday during the session. But the markets rally in the continuation. If you didn't take profit yesterday, then taking profit today would have been probably the best idea. The reasoning being that major targets have been hit, and you've got the CPI number coming up, and just profit taking is due anytime. And so, the way that we continue to play the euro was long euro yen. That had a nice little spurt high above 133. Now 133 is held on the retest so far. This is being driven by dollar yen at the moment more than the euro dollar pulling back, but the euro strength helps with the dollar yen if we can sustain a little bit of strength here. Now the FOMC minutes were pretty much as we expected in many regards. The inflation debate was there, but majority of members expected the inflation to be temporary still, and majority of members expect to raise rates in December. What was noted though was that the inflation debate was quite lively, and that what that does is just put more pressure on the CPI number this Friday, and more pressure on any of the CPI numbers that the Fed watches. So the average hourly earnings that it watches from the monthly NFP, the PCE that it watches as well, that comes out as well monthly, and then the CPI numbers obviously are very important just broadly. So the CPI numbers on Friday expect to be very hot. The headline number, the core number, expect to be quite normal, 0.2, but the headline number is 0.6 due to hurricane related effects. But that can just focus the market on US dollar strength for a little bit, maybe get a pushback, and that provides us with a better opportunity to get long the euro next week. Alright, so I put my buy limit here at 118.28. I might move that up a little bit given the extension last night. Maybe towards 40, and that's the where I'm happy to get back in. If we pull back a little bit further today, then we'll be looking for the rally to continue next week, as the focus will really switch on to the ECB. If you're not in euro yen, you could buy earlier at 133. Really, you have to wait probably for the CPI numbers now just to see what they come out as. But broadly speaking, buying on dips for the euro yen should work out as well. Alright, so anyway towards 132.90, 132.80 probably is going to be okay, as long as we don't get some sort of collapse in the dollar yen. If the numbers are really weak or miss by a lot, then it's fine. In terms of gold, it failed so far towards the 1300 level, hasn't got past it. The Aussie dollar is doing quite well. Kiwi dollar is doing very well. Now, everyone's expected today we're going to get the announcement of Peters who is going to support, right? But that's been delayed another 48 hours into the weekend. So that makes weekend trading for the Kiwi quite dangerous. But you're starting to see the relief rally already. And there is some internal debates going on between the Greens and Labour about what sort of deal is necessary to get him to join his national New Zealand First Party to join. Therefore, the internal debate between the Greens and Labour doesn't make them the likely choice, in my opinion. So the more natural fit anyway is the Nationals. Just how much of a maverick is this Peters guy? How much headline does he want? How much power does he want? And who's going to give him that power is the question. So that's what we'll be focused on over the weekend. So don't be very careful if you're in the Kiwi dollar going into the weekend. Make sure that you've definitely got your risk management under control in that regards. Aussie Kiwi is pushing back a little from the 110 level as the Kiwi dollar is outperforming. Dollar CAD did break the previous support, but hasn't really kicked on at the moment, with the US dollar pushing back so far today. But the damage was done, I think, and I think the selling on rallies is the preferred way to play here, while oil remains so strong. But really, it's not, it's not really that interesting a market given what we were looking for. And you're going to have to wait for that CPI number, so probably consolidation is going to continue here. Seems the US dollar weakness has topped out, so we're now going to just be sitting on a range. And if we do get further pullbacks, then you can look to re-establish long euro positions as the safest way of playing US dollar weakness. It'd be pretty hard for the CPI to come in higher than 0.6, right? But the 0.6 number is still a 0.6 number. It's going to be pretty strong. Let's have a look here. Some sort of debate going on. 6 monitors, yeah, that's how you do it. You don't need 6 monitors though, you can get away with 3 for most of what you're watching. You just have to have multiple setups for the crosses. I'm getting away with 2 at the moment, running just 6 pairs on each monitor, and then having the internal crosses. So if I want to look at yen crosses, then I go to the yen crosses page. But if you're looking at the majors, you can get an idea of what you want to trade most of the time. If you have a view of what's happening in those majors and that view is playing out, getting confirmations. There isn't any data really to focus on today, so you're not going to get much from that. So what we'll do is we'll jump quickly into. There's no data, but Draghi's speaking. Yeah, that's right. That's the panel. I don't know. I mean, that panel has got a couple of Fed members and it's got the ECB Draghi on it. I doubt there's going to be something dramatic said there. So I'm not going to be staying up for that, that's for sure. Stocks are continuing their epic run. That's providing fuel for the yen squeeze. So you're getting the euro yen, pound yen, dollar yen all squeezing higher yesterday. We'll see if that continues today. I mean, before the CPI number, I think it's more likely not that we don't get too much higher movement, but you never know. It seems like the choice for the new Fed chief is moving towards Powell, and that is a more dovish outcome. That's weaker for the US dollar. That was going through the rounds last night. That helps stock markets, and that helps us with our selling US dollar trade with the long euro. Lower for longer EC's mandate, very much from what I've read so far. There was some more talk about the repatriation tax, right? That's where there's trillions of dollars offshore. I found this article very interesting, reading earlier today. Pinning the hopes on the Republican proposals clear the way for US companies to repatriate profits stashed overseas. JP Morgan Chase says closer to 456 billion. I have to log in. I don't have those logins on me. Okay. Well, you get the gist of it anyway. That perhaps you're not going to get that big inflow that you wanted. And that might mute some of the response if that does pass. HSBC usually does pretty good analysis here. Few Fed officials, FOMC should hold off. Alright, so that's the sizzles 4 or so. Yellen is the boss, and she says it's imprudent. So they're looking for a rate in December and then a rate in March, followed by extended pause. Okay, well, the Fed dot point suggests there are going to be a lot more rate hikes next year. So at the same time you're getting QE tapering from the ECB, you're probably getting the market pricing out. The Fed changing its view on how many rate hikes next year. That provides the door opening for the 130 rally in the euro. So the majority is definitely in there. See you speaking tonight. One of those is the Doves. Well, we're getting the guy who's the Fed chief likely replacement speaking tonight, so perhaps it will be a little bit more interesting to see what he says. and you get Bernard, who's one of the dubs. Sheep is one of the dubs. But yeah, I think the market's really going to be focused on the CPI numbers rather than anything else. So Aussie dollar is back above 78, a little bit stronger footing, nothing really in terms of data to change it. It's mostly US dollar weakness and technical, support being found that the sellers are getting squeezed here. I doubt you're going to get too much of a flow. Some reports as well that North Korea is planning some short-range missiles aren't really getting traction. Yeah, EJ is the main trade I'm in. I think it makes sense on multiple reasoning. You might want to be buying a little lower if you're not in though, because the market can be pretty choppy here, but looks pretty solid. Looks pretty solid, breaking that 133 level. Looking on a different time scale on the 4 hour, it's back above here. So next level is 134, and then onwards and upwards is pretty normal here. I mean, stocks are record highs, right? It's not crazy. Not crazy if you're talking about all the yen prices going high. Still buying the Euro 125. Kitschy Euro pounder. Yeah, Euro pounds. I mean, it's one way of buying the euro, right? Pound's probably going to lag a little. I mean, but you get good news, and this trade gets shot out of the water. So for me, it's a little too dangerous given its headline risk, driven from the UK side too much, and it's a little hard to anticipate the pound's moves. And when the pound starts to shift, it's pretty hard to stop, especially pound yen. Pound yen's though a little sluggish today, isn't it? So no real reason to be too worried here about euro pound long. But just I mean, in normal settings, it's not my go-to play. And you can see that Euro Aussie's under pressure as the Aussie dollar is squeezing higher. Same with the Euro Kiwi, a bit more sharper, and the Euro CAD the same. So there's multiple ways to play the Kiwi recovery. You may want to wait till you get confirmation on the weekend though, as if this is a false dawn, then the market seems to be running pretty much with the Nationals winning though, so all that will do is make the shock of a Labour win even bigger and push it below 70 cents. But yeah, I think there's more dangerous trades than looking for value in the Kiwi, that's for sure. And definitely not buying the Aussie Kiwi until we get well low, 109, 108.50. Alright, so I actually think we're going to get a boring day today. Yeah. Selling CAD Swiss. Probably not. Probably not. I mean, Euro Swiss is pretty strong, right? Which means that the only reason you'd be selling CAD Swiss is if you know, definitely be buying Euro CAD. And so looking at the Euro CAD trade, that doesn't scream to me that you want to be testing this at the moment. While the Euro Kiwi and the Euro Aussie are enjoying little sell-offs, the Euro CAD, if anything's underperforming. And since the dollar CAD broke below the support, potentially we're going to get more selling of the dollar CAD. Just on the sellers are still around, and they want to probably find out where the biggest support is. And I doubt this is the end, right? So in that view, then you're asking for the CAD to rally slower than the Euro, and then even slower than the Swiss. And if you look at the Euro Swiss, it's looking pretty strong. So you found a way of making it harder on yourself by buying a weaker currency than you could pick. So you could pick the Euro, right? If you really want to play that same trade, you just buy Euro CAD. But since I don't really like the Euro CAD at this point, then I can't really think that the CAD Swiss will somehow outperform. Yeah, it strikes me as a very dangerous trade. Yeah, I'd be buying that if anything. Yeah, no reason. I mean, yeah, you got resistance here, but that's neither here nor there. Yeah, so just probably avoid that unless you're already in, and then I have no good news for you. I mean, anything can happen. You'd probably need some stock market selling, or Euro Swiss profit taking would help you as well. But there's better ways, there's better trades out there. Alright guys, so yeah, today I'm going to do a short one. There's no real data out, there's nothing really to be looking forward to except for probably range trading today, and looking at later tonight the panel. Perhaps we get tidbits from Powell. I'm much more interested to hear what Powell has to say than Draghi or Bernard, because we know what their situation is. So in the short term, just be be pretty defensive in your positioning and look for opportunities to get with the bigger trends. So buying the Euro on the dip makes sense. Just draw that a little bit lower. And buying the Euro Yen a fair bit lower makes sense, but other than that, I can't really expect rockets tonight. Tomorrow I'll probably be in the room at 11:30 Sydney time when that CPI number comes out, and I might have a bit of an immediate reaction for you. The price action is going to be telling. If the number comes in as expected and the US dollar can't maintain a bid, you can get more aggressive in buying the Euro. If the number comes in as expected and the US dollar outperforms, then we have to be a little careful next week with buying the Euro. Alright boys, best of luck tonight. Just a quick one today. We'll be back on Monday with a full update on what happens with the CPI, and if you're in the room tomorrow, we'll outline what's happening if I'm there as well.